There are websites out there quoting Capitec eats Big Four's lunch. Is that the reality, sir?
Bronwyn, I think that's probably a bit dramatic now.
Journalists always like to dramatize the picture.
Yeah, I know. We still see ourselves as a pretty small player. In the individual market, people using Capitec as their primary bank only comprise about 4% of the market. So I think the aggressive growth obviously is quite pleasing to us, mainly because we find that the market really appreciate our product offer. And to that extent, we understand that there's a lot of South Africans that are looking for an alternative to traditional banks, and that is the gap that we're taking.
There are market commentators out there that are nervous of your growth and say that perhaps you are expanding too quickly, your share price is getting ahead of itself, Blue Financial pops into mind. We're not going to see a recurrence of that situation, are we?
Now, Bronwyn, when we built Capitec, we did so with the intention to build a substantial bank. If you look at the technology platform that we've put in place, it's all world-class, world-best technology, and the control in the bank, I think, is quite evident in the numbers. 4 days after year-end, we've got our final numbers. Within a month, we've got audited financials out, and on a day-to-day basis, on real time, we understand exactly what's going on in our business. 7 o'clock this evening, I got an SMS with all the detailed sales, and tomorrow morning, 7 o'clock, I'll get an SMS with our arrears numbers. So we understand pretty well what's going on in the business. I'm not concerned about the rate of growth. That is really what we forecasted. And I think to a large extent, the technology platform that we've put in place does put us in a position to grow exponentially.
Gentlemen, let's open up this discussion. Donald, I
think the big question out there, I mean, really a fantastic set of results. But you know, if you see just the general tone with the other banks at the moment, still being relatively cautious about you know, aggressively lending into this market, and your loan book seems to have grown quite dramatically. Are you seeing a sector of the market that they aren't seeing? Well, I think that, you know, the concern is that you know, is this aggressive loan book growth coming with additional risk that the other banks aren't prepared to take on at this point?
Well, I think again you need to look where we come from. When we developed the business model, it was really to focus on the unsecured lending market. Myself and the management team have got a lot of experience with that, starting from back '95. And unfortunately, as we started with the small bank crisis in 2002, we were forced in managing our book short. What has happened in the last 3 years is really changing the profile of the book away from just short-term, low-value loans to higher value, longer-term loans. To a large extent, you know, our main competitor in that field is Able. We've built very good qualitative models to ensure that we understand exactly what risk we're entering. It's not the same market that the other banks are retracting on, because the market that they're retracting on is secured lending, the mortgage market, the hire purchase finance of cars and so forth. It's a very different market, because most of our customer base, up to very recently, have not had access to credit other than short-term credit limited to 10,000 Rand. With the advent of the Credit Act, that opened up, and we are migrating towards longer-term, still unsecured loans, repayable over a longer period. So there is a structural change in the credit market, and we're pretty cautious in how we migrate away from the shorter term to the longer term market. Frankly, less than 5% of our customer base qualify for a 48-month loan, to give you some indication. I'm pretty confident that the credit models that we've introduced does enable us to measure risk properly in the assessment phase, and that the process and procedures that we've put in place is more than adequate to understand exactly how we deal with the management of arrears.
Adrian?
Yeah, Rian, I think that the business that you're building extends South Africa's reputation of being very competitive in the banking industry, and I was Particularly interested earlier this year to see the Credit Suisse research, which I'm sure you're familiar with, on brands of tomorrow, and Capitec is singled out as a business that stands out in analysts' minds as being a global brand of tomorrow. I'd be very interested to hear what your aspirations are in South Africa and outside of South Africa.
Well, I think we're pretty clear. We, at this stage, have got significant growth within the country. We still see lots of potential within South Africa. I know the potential is out there. We've researched some other countries that does find our model, our product offer very attractive.
Can you identify them?
Oh, sure. Most of the emerging countries, India, China, Africa is the obvious sure. one. But we're a very disciplined management team. We just don't take an opportunity because it exists. I get phone calls from insurance companies on a regular basis asking us, you've got a 2.5 million customer base, so why distribution network? Why don't you add insurance? And our view is we need to focus on our core competencies and core banking. We've migrated away from micro-lending to full bank services. It was a difficult process, and I think we've done so fairly successfully. And a highlight to me in what we've achieved, especially over the last 6 months, is the income derived from banking activities. That has nearly doubled to 235 million, which is a good indication of the potential that still exists in the South African market. But we can only explore that potential if we do what we do better than our opposition, and frankly, I believe we can still do a lot better than what we do currently.
Just one note of caution in your presentation was around the public sector strikes, and that would increase the rate of loan defaults. Is that going to have a material impact on your results in the short term?
No, Bronwyn, we don't expect that to have an increase, a material impact. What we said, I am concerned about industrial action continuing, and for that reason, we created additional provisioning to compensate for that. If we just use historical trends and base our provisions on those models, then I think that would have been the case. But for that specific reason, we've been pretty prudent.
And in terms of corporate activity, with all those foreigners out there, just looking at the Walmart transaction possibly on the table at the moment for Massmart, you must be getting approaches from international players banging on your door saying, exactly, you offer value, this is the model that we'd like to take us into emerging markets. I know you probably can't share any state secrets, but would you be adverse to, down the line, a tie-up with an international banking partner?
Well, Bronwyn, we've got a very different approach to what we do to traditional banks. And I'm not sure whether it will be to our benefit to tie up with a large international bank. Because I'm not confident that they will understand our approach, that they will understand where we're heading. So at this stage, I'm not really excited about getting involved with a big international bank.
Rian, there are other banking CEOs in South Africa at the moment strongly calling for further cuts in interest rates and aggressive cuts in interest rates. What's your stance at the moment come that November MPC? You must have a view and you must be speaking to economists on a regular basis.
Well, I must be honest, I've been wrong the last 3 ones. So
From what cautious. You're seeing on the ground, do you think
you could be an economist?
Well put, Adrian.
I've always got 2 views on that one. I feel sorry for people, aged people in particular, that get a decreased income stream from savings. But on the other hand, especially in our market, the cost of short-term loans is high. So I prefer to see a decrease in interest rates. And obviously, we would like to see a stimulation of the economy. We're not really experiencing that on the ground. Our expectation is for the economic conditions to remain tough for the next 12 months at least. And we've based our assumptions for our business model on that.
Gentlemen, anything else from your side?
Yeah, I would be very interested to know, Bronwyn alluded to the point that some people are making observations that the rating on your business is very demanding. And to me, the most obvious metric to use to measure a bank is the price to book ratio. And by that standard, your business is on a very high rating relative to the other banks. Do you think that that's a fair metric, and would you agree with that observation, or do you think that there are better metrics that we could use to assess the rating on your company?
Well, we look at expected earnings growth as the main measurement, and if you track the Capitec share price for the last 5 years, there's a very good correlation between the increase in our earnings and our share price. There's been a correction, and for the last round for the last 2-3 weeks, there's been a bit of a run, and that obviously indicates that the market expect continued growth at current rates.